Hello, hello. We are back. This is the 5ers live trading show or stream. It is a show, but a stream. How is everyone doing? Are you ready? Everyone watching this, are you ready to get some insights on the market? Getting ready to, hit those those profit targets on your prop firm account. Get funded. Are you ready? I am. Um, Anastasia is with us today, as she will be doing for many, I hope, many years. How are you doing, Anastasia?
Hey Victor, I'm doing amazing. Ready for this upcoming event that we have happening today, right? It's a very important day in the markets from the macro perspective. We're gonna talk about it, and I have big plans with Fiverr, so I'm very excited to be here. Very excited to see everyone in the chat. We see your comments, guys. Super happy to see every one of you. And are you guys ready for the amazing live stream and for potentially see some interesting ideas in the market as well? Let us know.
Yes, for sure. Let us know in the chat. We will be, as usual, we'll be, talking, watching, taking you by the hand to the charts, share with you our analysis. We have Anastasia. Anastasia is an expert in the volume profile approach. So make use of that. You have someone who can help you, navigate the volume side of things, volume profile, I mean. But especially today, as Anastasia mentioned, we had rate decision. It is the most important news of any currency, right? What does the central bank decision, what is it about the interest rate? Is it increasing it, holding it, or going softer? What is it? And that question can have huge implications for each currency. And today we have two. We have the Bank of Canada bringing out their decision, interest rate decision, and later on today we will have the Fed, the big Fed, the Fed being the most influential central bank of all. So it's going to be a great day, and hopefully we will not hopefully we will be discussing all what can happen on a technical side of things, and perhaps even a little bit the macro from the macroeconomical perspective. So Anastasia, how what are you looking at today?
Well, it's funny you said that the Fed, the big Fed, it's also like the most expensive voice in the world, right? The chairman of the Federal Reserve, Jerome Powell. We have 5 hours until the interest rate decisions, 5.5, like almost 6, let's say, right? And I find it extremely interesting because it's the first interest rate decisions since Trump took the presidential office in the US. And until that moment, we knew that the Federal Reserve is going on the rate cuts, right? And we had several rate cuts in a row. Even when no one expected, in fact, the rate cut, they still continued. Now that Trump took the presidential office, and with the tariffs that are essentially already taking place, right? And with the upcoming tariffs potentially from the beginning of February for Mexico and Canada, things may change. And Jerome Powell clearly stated that he's looking into stopping, pausing for the moment being the rate cut. Whether it's Trump actually communicated that he's open to have a conversation and discussion with Powell about bringing the rates down, because his goal is essentially to bring rates extremely low. I don't know if everyone knows about it, but nonetheless, right? Trump's idea is, besides implemented tariffs, still have lower rates. So we have two sides of the coin, and I'm very curious to see what is going to happen today, because for right now, I'm going to share my screen.
Yes.
Yeah.
Before you continue, I have a question. It's quite interesting to hear that, because you said Trump wants to, have a discussion about the policy or the decisions that, Fed will be taking. However, as I remember, the Fed is independent, isn't it?
Yeah, it is independent. That's why he turned it in the way that he's open to have a meeting with Powell to discuss it. So to find the middle
Okay.
ground, I think, because if you remember, that Trump was actually quite against Powell, and there were even statements that he will try to fire him and everything. But the moment he took the presidential office last week, he already stated that he will be looking to find the middle ground and actually bring the rates down, despite the tariffs.
I
So
see. Okay. That's interesting. Well, we'll have to see how that plays out.
yeah,
But the question still is, why would he need to discuss anything if the Fed is independent, then no, it's whatever the government thinks is, of not is not relevant. Or isn't it like that?
I mean, it is irrelevant, but Trump is Trump, Trump is a little
Ah,
different than every other president, I feel like. And he will definitely try to find the ways to influence the policy as well. Because he's not stupid, right? He's a very smart man. He's a very good businessman, no matter what you say about him. So he
mhm.
knows that bringing the tariffs up might boost the inflation. But I also
Mm.
don't think necessarily that bringing the tariffs are going to happen the way that everyone thinks it will, because my personal opinion is that he's probably going to be using the tariffs as a manipulation towards leading the countries to do what he wants to do, and going into certain, also finding the middle ground, or acting in the way that Trump prefers, in a sense. Because we saw it, right? We saw what's happening already in
Yes.
Mexico, the tariffs, and potentially Chinese and Canadian tariffs also coming in the beginning of February, unless I think the country is going to be following what Trump suggest, quote unquote, right? Because they're not going to have too much of a choice. So I'm very curious how
Exactly.
I'm very curious how the next months are going to be. But the current rate is 4.25, 4.5, and 99.5% probability for the current moment is that the rate is going to stay exactly the same way. And only 0.5% the probability is the rate is going to actually change, which also would make sense, because first of all, there wasn't meeting yet between between Trump and Powell. First of all, secondly, Powell already stated before that he's not really looking to continue decrease interest rate for a current moment being, and Trump just took the presidential office recently,
Yes.
and the tariffs are still upcoming. So, in my personal opinion, I think the most probable is that the rates are gonna stay the same way. It would be also logical to see how their first tariffs and the Trump's policies are gonna affect the market initially. And essentially, well, we know that if in 5.5 hours the rate is going to stay the same, that it might continue boosting US dollar rate. Well, actually, no, if the rates are going to stay the same, right? Normally, if the rates are going to be lowered, right, this brings the potential inflation up, and the currency of the country continues
Hmm.
right to gain the value as well. Now the rate is still high, right? So for the current moment being, I'm still expecting the US dollar to continue to go to the upside. And I'm going to show you the ID. I'm going to change my screen. I'm going to show the ID that I'm having right now. Here we go. I'm going to check if my screen is not visible yet. It's loading. Yeah, thank you. So I was looking into this GBP USD yesterday, and I closed it initially break even, and then I re-entered it. Now, first of all, because of the macroeconomical perspective, right? Because of the tariffs, because of the interest rate. Because if the rate stays the same, the logic I'm thinking is, okay, if the Federal Reserve decides to keep the rates, it means they are expecting the tariffs to boost the inflation.
Okay.
So it's about expectations, right? I'm preparing kind of to trade expectations here.
Hmm.
And this is gonna likely send US dollar higher from my expectations. I might be wrong, but that's the logical I'm following. What do you think about it?
I'm not a huge macroeconomical trader, um, macro guy, but let's follow that logic again. For me, I'm a technical trader.
Yeah,
So you think if the rate is, if the rate is cut, you said, or held?
health.
If it's held, you think that's going to be it's going to drive inflation even further?
No, because it's not essentially about the inflation now, right? What we are
Mm-hmm.
expecting is the decision of the Fed. And
Mm-hmm.
that's for now is going to influence the currency. Uh, it's my logic, right? It's
Okay.
not about yet inflation, but it means if they're going to hold the rates, that
Mm-hmm.
Fed expects the Trump's policies to boost the inflation.
I understand that. Yes. Okay. I understand that. Because otherwise, if Fed didn't have that expectation, what would you think they would be doing?
I think they would continue cutting the rates because 5.5 is still quite high rates.
I understand your point right now. Okay, I understand. So it's the expectation. It's not right now. It's down the line.
Yeah,
What the policies, what Trump's policy will be affecting the inflation, and they are taking preemptive action, if you will, by holding
yeah,
rates at the current level because they have certain expectation of the effect of the
yeah.
policies about Trump. Um, I can see that, although it's this is not a counter. It sounds like a counter argument, but it's not really. Believe me, it's not. Um, what makes you think that? Do you have an idea why you think the Fed, or let me put it this way: do you have any idea why Trump's policies would increase the inflation? Is it back to the tariffs or not?
Uh, it's back to two things. Again, it's just my personal perspective, right? So
Okay.
I might be wrong, but it's just the logic I'm following when I'm analyzing the macro right now. So it's
Okay.
back to two things. First of all, Trump's tariffs, right? Essentially, which is gonna make it more difficult to import their products and services outside because it's going to be
Yes.
high tariffs, so it's going to be much more expensive. Now, secondly, he wants essentially down the line, his goal is to bring back the focus of production inside of the country because
Mm-hmm.
for moment being, if we look at the GDP of the US, they import massively. The production inside of US is actually not so high
Mm-hmm.
itself, also because of the taxes that they have, the tax policies and everything. So he wants to bring the production back, make sure the production inside of US boosts, essentially, in other way.
Okay.
But for the moment being, it's been so many years. They don't have all the necessary infrastructure, the initial, products like materials and services around it to start producing immediately at the same rates as they were importing similar products and services, which means their demand is going to be boosted for example, materials, right, for the energy, because energy
Mm-hmm.
essentially is also going to be needed for the production within the country, for
Yeah.
metals and so on and so on, right? So the prices also I'm expected to grow because of the high demand, and supply is going to be lagging behind for a while from my expectation, because again it's will need to catch up slightly because it's been a long time, right, since they were importing more than they actually producing within the country. So because of this, I'm also expecting the inflation to grow especially in the beginning, because the Trump's down the line idea is to obviously make US stronger and US production more strong and more confident standing on their legs. But for like in the beginning, it's probably going to affect it in the opposite. It's going to backfire before stabilizing again. That's my logic.
I understand. Yeah, and I can follow it. All right. So you think the tariffs and the fact that the production within currently production level isn't up to par, and it's going to take some time before that is able to be increased, and that will that the increased demand will cause inflation, and you think on because of those things, the tariffs and the ramping up the production will increase inflation. Those two things is what the Fed is considering, because considering not to cut rate further. They're stopping here. They're pausing until they get more data, so to speak, from what the policies of Trump, what effect they will have. There was something before we move on. And we go to the charts. There is something you mentioned that I think is so obvious. I'm not a fundamental guy, but of course I live in this world, and I read news just like anyone else, and it looks to me very obvious, and maybe it's obvious to everyone, but that what you said is I agree with you, where the tariffs are perhaps Trump. I mean, I'm not a political specialist, but uh, it looks like Trump uses the tariffs not necessarily because of economical reasons, but as an instrument to, for foreign policy, right? As you said, it
So that,
is, you comply with Trump's plan, or tariffs will come to you,
yeah,
basically. And it's very, very effective. If not long ago there was a crisis, and you mentioned Latin America, Mexico, but recently as well, Colombia had they had a beef, let's say, or a little disagreement on a certain issue, and within hours Trump posts, tariffs coming to you, 25%, and if you don't comply, next week is going to be 50%. And 6 hours later, if I'm not mistaken, the president of Colombia, obliged.
yeah.
Everything is fine. So you can see how powerful, that lever, that instrument is, and Trump really knows he really knows how to play with it. And it's not using it for economical reason. That's just a foreign policy political play.
Yeah, I feel that as well. And I think if this is perhaps what Trump wants to discuss with Powell in terms of the rates down the line, again, right, going forward. Because if this is how he's going to be using the tariffs, they're not going to have such a drastic effect on the inflation as actually everyone expected before. And then essentially, perhaps we can continue to see the rate cuts this year. But after he became a president, and if he won already elections, the probabilities of the cut in rates this year decreased from 4 or 5, I don't remember correctly, don't want to lie, rate cuts in a year to 2 or perhaps 1, somewhere slash. It's just
Really?
just because he took the presidential office. So throughout this year, 2025, for now, until there is no conversation and discussion, they expected 1 or 2 rate cuts only. So that's another reason why perhaps we're gonna see the rate continue to be the same weight for today's meeting.
I don't know if this is an issue or an item or not when they discuss inflationary expectation and things like that. But I just read today, if I'm not mistaken, that they are trying to lay off I don't know how many thousands of government workers, for a potential cost reduction of about 100 billion, if I'm not mistaken. Does the government spending, in this case salaries, does it have a weighing on inflation, do you think, or am I just, this is just one little detail, it's not very relevant?
If you open the CPI, because CPI consists of different parts, right? There is like a governmental spendings, right? And there also, if you look at for example, the job, the jobs and payouts, right, and the salary stats, there is a part for governmental one, but it's not such a big actually impact, because the biggest impact that has on inflation is their consumers. They're consumers, just people, you and me, who spend our money, going out on products and services within the country. So that's why like these policies of the interest rate, they're mainly directed towards the middle class, because, well, they are the majority of where the spendings come from, and what affects, boosts or slows down the inflation in the end of the day. That's why the whole chain, we had the discussion a couple of streams ago already about the hope model. Remember that how this gets affected, and if essentially first the housing, but everything down this line comes down to us as normal people who go and spend our money. It's like everything is meant to either stimulate people, to give them more hope and more confidence to go out and spend more money, or to make them afraid and scared about what's to come and let them think, hey, I'm going to rather stay home and I'm going to slow down with my spendings. I'm going to perhaps postpone my big expenses, purchasing houses, cars, and so on, just because, well, I'm not sure what's about to come. So government, I'm not necessarily 100% sure how much is going to affect and slow down the inflation, essentially. I think there is a different purpose behind it, but not necessarily this.
I understand. Yeah, it's I believe it's the Doge, the department by Elon Musk. It may be I'm sure they have a plan behind it, because that's their policy, and this is what they're starting with. So it's important to them to make truth to their promises to the the voters, that they're going to have a lean government, a more efficient government, and that's part of that. So I like that, or I can understand, and I can appreciate that. There's something here. We have a question, perhaps before we continue to your chart. We have a question here from Rodrigo, asking about the seasonality of the Dixie, a weak euro, weak pound, and CAD. I don't know these seasonality. What can we say about the seasonality of the Dixie?
Well, essentially, I'm gonna open the chart back and we can have a look at it together. That's also something else I'm trading right now, but that's later.
The market is definitely moving.
It's expectations. A lot of expectations about today's meeting, I guess. First of all, well, we can definitely see that it's not yet bearish, right? It's definitely too early to say that DXY is bearish. There is nothing from the bearish perspective. First of all, from the technical aspect, we had the huge volume accumulation below. Yeah.
No. He said strong Dixie and weak euro pound.
Yeah, I'm agreeing. I completely agree. I feel like it's quite strong, and it's definitely too early to say that we are anywhere near the bearish potentially reversal, because the only things that we see, that we had a huge volume accumulation below, right? Consolidation. We had an exit to the upside. We had the accumulation here between, let's say, 107 and 106. And the price definitely strongly holds above it. So until we are above 106, I would not look for the bearish DXY. And accordingly to this, I also wouldn't look for the bullish EURUSD or GBP USD. I had we talked about this last week with Alex. I was looking for the short-term reversal to the upside on GBP USD, AU, and EU. But I was saying already then that I'm not necessarily looking yet for the massive bullish reversal, because I feel it's too early. And seasonality, Rodrigo says as well, I'm 100% also agree with that based on the seasonality, we also can see that DXY is usually strong during the February, majority of it, and EURUSD is usually weak one, right? Also for Euro and GBP, we can also add the potential tariffs that may come to Europe, which is going to affect even more and push Euro and GBP also even more down. And pound is just tanking because of how Great Britain made their decisions after the Brexit. I mean, it's been going not good, and I'm expecting UK 100 as well to go down still continuously. And I'm looking for GBP USD continuation to the upside, not only because of the boost of DXY, but also just because pounds is just tanking. It's one of the main things I'm actually looking for 2025. I'm looking for continuous short on GBP USD until something changes for Great Britain, because the decision they made were really not good for the economy, and we can see it, right? A lot of people moving out, people who are, have their businesses trying to move them outside as well. UK just because of the taxes as well that are really affecting, residents there. So, yeah, I agree with that.
Great answer. So there is, you agree with the with the statements of Rodrigo when he mentioned strong dollar index, and the weak other pairs mentioned there, euro, pound, and the CAD. Perfect. All right, let's dive into your chart. What do you want to show us today? What do you want to talk about? Where's the opportunity according to you for traders who are, they want to see a setup, a golden setup? What do we have for them?
Well, first of all, let's say that interest rate decision is coming, so everyone should manage their risks today, especially, right? Really
Yes.
manage their risks. But as we are talking about DXY already, let's see, right? We came back to this area of accumulation, and right now I'm expecting the DXY to continue higher, right? If we break through this zone here, I would expect the DXY continuation to the upside. Now, why am I talking about this? Because I use DXY as a trigger also for my EU, GU, and AU setups. Because if DXY goes up and then corrects itself, usually somewhere the same period, we see the correction on EURUSD and GBP USD. And if we are above this zone, I'm looking at 108.1. I will be looking for the continuation of short of EU and GU. Right now, I'm in shorts already. I'm in both sells for EU. Sorry.
Before you continue, there's I think we want to have that repeated. You mentioned the level there. After which your decision going forward will depend on that level being respected or not, right? What is it, the level again? 108.1, correct?
It's 108.1. Yeah, right here, yes. 108.1. I want to see the price breaking through it and then perhaps coming back closely as a pullback. Why? Because, well, this is the volume accumulation zone. We had the move to the downside, the impulse. We had the consolidation. We had the next impulse. This is usually the majority of where the volume was traded. Usually consolidation is always about volume accumulation. Now, what else we can see is we can also see the previous one right here. So this zone was continuously as a huge volume accumulation for DXY already from the end of 2024, which is quite interesting because the price keeps respecting it. We had the volume accumulation, the price had an impulse to the upside and came back to it, we can see. Again, they had an impulse to the downside, still rejected. Then again, the volume accumulation, now we can break it. I'm definitely going to be looking for the continuation as an impulse to the upside from 108.1, 107.8. This is the zone I will be looking for.
Okay, could you repeat those numbers again? Because I think people in the audience, they especially want to, hear the levels so that they can, check on their own analysis if they, if this is something they agree with, they can use, that it is in agreement with their own analysis. What numbers did you mention?
108.1, 107.8.
Okay.
This is the gray zone that we see, the smaller gray zone, which is in the middle of the chart right now.
And what are you think what you want to see before you trade long the dollar is you want to see it being broken and being retested again. And that's where you want to, potentially take advantage of it.
Definitely. I want to see the price breaking through it first of the DXY and holding above. I'm going to be looking for a 1 hour time frame, 30-minute time frame. where the price can actually hold above this zone before going long. Okay, so I want to see definitely that it closed above, because sometimes, especially on the high, like important economical events, like for example interest rates today, the price might create a wick, but still come down on the hourly time frame and close below it. So that's essentially just going to be the collection of the liquidity and going back down, which is not confirmation that we are still bullish, right, on the this time frame as well. So I'm going to be looking for the whole.
Yeah, that makes perfect sense.
So yeah.
All right. So and this just to put things into perspective, you're going to be looking into the 1 hour chart or the hourlies, because I see you have the 2 hours there. Do you switch between 1 and 2, or is it doesn't really matter that much?
Oh, my majority of my analysis I do on the 1 hour and 30 minutes, but always, and this is something that I find so important, a lot of people don't do it. Every weekend, I do my analysis on daily and weekly time frame. And I decide and mark out the levels and the zones for me, which are important for this week and for the next days to come, where the price can reject, what are going to be my zones that if the price breaks, that's going to be determine a shift in the trend, where I'm going to be expecting the pullback and the reaction to look for my trade opportunities. And analysis on the daily and weekly time frame just helps me to determine the overall trend for the next upcoming days. This is why I started the DXY before on their daily time frame as well, just to show that, hey, that was a huge volume accumulation zone. And on the daily, we also got outside of this huge consolidation that lasted for years here, right? Also, we had this accumulation zone, which is the same as the previous one. So we have double as huge support for DXY, where we already rejected, right? So as the price goes up from here, I am expecting the continuation. But then my daily analysis, I still do on hour and 30 minutes. So during the weekend, the higher time frame, and during the week, I just follow up on that on the smaller time frames, 1 hour, 30 minutes. 2 hours I just open, to be honest with you, just to make sure that this chart is visible. Because if it's 1 hour, it doesn't fit the previous consolidation, which is important for the explanation. But that's it.
Yeah, I understand. Thank you for clarifying that. So the to put things into perspective, so you're going to be looking at 1 hour after you have this, seen and checked you started with the top-down analysis using the higher time frame to know where the direction you want to have a bias. When you said it needs to break and hold that level that you just mentioned, between the area you mentioned with those two levels, how long of a time period are we talking about holding? Is it the rest of the day?
One candle, not just one candle I'm looking at, actually.
Just one candle. Okay, that's interesting, because holding might mean different things to different people, and some people might say, well, it needs to stay there a couple of candles. But great. I like that. I like how you have clear rules to decide what is something to you, which is so important. Have definitions, even if they are your own definition, it doesn't matter, but you have definition, because those definitions, and this is the takeaway for the trader watching, those definitions will allow you to bring consistency, because you're making it's much more easier to have consistency when you have a consistent approach, which means having a definition to clearly know when it is and when it isn't a certain thing. So that's awesome.
I completely agree with you. I feel like, we take emotional decisions as traders. When we don't have answers to certain questions to ourselves. Like, for example, what is the holding above the certain level means for me? Like, am I supposed to already take a trade, or am I supposed to wait a little longer? And then, okay, I enter the trade, but if I didn't have the clearly defined rules, I'm like, oh, but maybe I should have waited a little bit longer, And then the trade goes in the drawdown, and this emotional range becomes even stronger. And I'm like, oh my goodness, maybe I entered too early, and I exit the trade, and then the next minute I see it going in the profit. And then FOMO becomes even worse. I open the trade again, and then I see it going back, just hitting myself. So instead of just sticking to one trade, stick to exiting trade, entering again until that account is potentially gone, or we reach the daily drawdown limit, just because we didn't have the clearly defined rules. And I feel like the same happens when, for example, we don't have clearly defined rules about what do we do when the trade is running. When am I supposed to take my partials, for example? Why am I even planning to take my partials in general? Or when I'm planning to move my stop loss to break even? Because, I feel like a lot of problems of traders can be just solved with answering these simple questions to themselves and planning it, because it's about statistics, it's about sticking to something again and again. And it's not going to work 100% of the time, because I have my rule that I move my stop loss to break even when it's 1-to-1 in profit. So if I had 20 pips stop loss, I'm going to move it into break even when it's 20 pips in profit. And 30 pips stop loss, I'm going to move my trade to break even when it's 30 pips in profit. But it's not going to work 100% of the time. From time to time, I'm still going to have my break even kicked. And then still trade is going to go into the profit. Doesn't mean that it doesn't work. No, it's just statistics. More times it works and it more times saves me from the loss than it doesn't, then I should continue to stick to this rule. But if I'm not going to know what is my rule, well, obviously I'm going to end up doubting, and doubts are just going to push me into emotional decisions, which are going to push me into losses. So I think this is so important what you said about defining your rules really clearly.
Man, I like every bit of what you just said. It is so true that and liberating when you have clear rules for what and when you need to act and how. It takes away the whole guessing game, and that's exactly what we as traders need to do if you want to have, no emotions, or no emotional influence. You will have emotions, but they will not influence your actions, because it doesn't depend on you. It depends on the rules that you have already decided in the past, that will decide whether you're going to move, as you said, your break even, and when, and to where. Is it is what is holding, what isn't holding. It I think it's the only way to get consistency and progress. Of course, there are other things we can do to progress our trading, but at a certain moment, you can get around, having rules, because it will limit your growth. With your profitability, you will not be able to, a certain level. You're not will not be able to progress into higher levels of profitability unless you do this, which is applying, using definitions and rule to act upon, and definition that tells you when to do things and exactly how to do it. It sounds very obvious, sounds very logical, but you really have to do it. It's so important. I like that, Anastasia. So that's all right. So we have the Dixie, and in 4 minutes we have some news coming out. Right, the Bank of Canada bringing their interest rate decision known, if I'm not mistaken. Yes, that's correct. In about 5 minutes, or actually less. That's correct, right?
Yeah, I think so. Yeah. So, what do you think about the interest rate decision for Canada? Are you expecting it to affect the US dollar?
That was the next question I was going to ask you. But in my opinion, uh, I don't look at the interest rate decisions normally, or even the correlations they have. I don't say that they're not important. Simply, I haven't done that. I don't have the data on it to really say much. But I would think that because it's continental North America, it says something, because their economies are intertwined, right? They're neighbors, and the economy in Canada, although it's a different country, everything, when I think it could be a proxy to what's happening in the States. Now today they're getting out on the same day, only a few hours apart. But I would think that they could, give us a little bit of a preview of what's happening. It doesn't matter. It doesn't mean that every time one moves, the other one moves the same, because different country, different situation. But for they are subjected to the same, geographical influences by being so intertwined. So I would think that it does give you an indication of what's to be expected. But is that correct to assume?
I actually like what you just said about their connection of what we can expect from the U.S. dollar, from U.S. Federal Reserve, right? Based on what Canada is going to decide, actually is completely true, because macroeconomy is called macroeconomy for a reason, right? That's why, for example, if they're because you remember that European central bank started to cut rates first, and only then the Federal Reserve followed. But by European Central Bank cutting rates, we already saw it affecting US dollar before we even knew that Federal Reserve is planning to do so. Just because if many countries around the world start doing it, the likelihood of the other country following the same narrative also continues. Or increases, right? So I'm pretty much think that Canadian decision is going to affect US dollar as well, because of the expectation of what Federal Reserve is going to do next.
Yes, Void is making a observation here of 90% of the Dixie basket contains euro. Void says he doesn't think it will affect the CAD as much. Um, I understand that the what Void is saying, looking at the composition of the Dixie. However, what the logic behind what Anastasiia and myself were proposing is that it's not the composition. It's not because of the CAD moving, the movement in Euro CAD, that's going to change the Dixie, but more the expectation of investors and traders, everyone would have on what the Fed will do on their policy, meaning because central bankers, they do meet and they do things in coordinations. They do have meetings, and even though each country will have has the liberty, the freedom to do and the obligation to do their own policy based on their situation, since they work together to some degree. When one does something, it does give you an indication. It's not a prediction, but it does give you some kind of indication. What are they talking about? One is lowering rates. Does that mean that the other one are following suit or not? Not always, but sometimes it is. It is a sign that what they are, as central bankers, when they talk about each other, I mean, with each other, what they're considering. So how do you say that, the a collaboration, or that coordination. Um, but a very good point.
I'm sorry, I'm gonna break in the word, but actually, news are in 1 hour. I just checked, so it's in 1 hour there are Canadian interest rate decision.
You mean the CAD news, right?
Yeah.
It's in 1 hour. Okay.
Yeah. It's.
I see. I see that I changed my. I was looking at Forex Factory with the GMT, and of course, I'm not in GMT's time zone, so that's the reason I thought it was in 5 minutes. But thank you for that. Thank you for letting us know that. Perfect. Thank you, Void, by the way, for that observation. I think keep that engagement, guys. Those questions, and even if it doesn't matter if you have an opinion and you think you can contribute to the discussion. By all means, use the chat. Let us know your opinions. We'll post them here. We will not be able to post everyone's comment, but do that, because that can start the conversation going. You don't have to be necessarily right, but by mentioning different things, Like for example, Void, who just mentioned the fact that he's looking at the composition of the Dixie, and why he thinks the interest rate decision in Canada will or will not affect the Dixie, and but having laid out that comment or submitted that comment, we can get a glimpse at how Void is thinking. It's not about Void necessarily, it's about how other traders are thinking, and the people in the audience can learn from that by looking how the thought process is of others. And it's not about necessarily being right or wrong. But great stuff, great stuff. I like that a lot. All right, let's continue. So we have you're looking at dollar CAD for the news, but it's going to be in about 1 hour, actually a little less than 1 hour. What is your technical read on the dollar CAD pair?
So I don't have much technical aspect on it because, well, it's trapped in consolidation. I usually don't trade such a thing. As you can see, a couple of streams ago, I actually had this USD cat position also when we were live with Alex still.
Mhm.
And I had this, I exited it earlier, and essentially it reversed afterwards. But right now, I think it's just not necessarily, objective to just enter it because we are waiting for the news. Sorry, guys, my puppy is just right here. I'm waiting for the news, first of all. Secondly, it's trapped inside of consolidation. I think Victor, can you just take over 1 second? I'm going to calm him down so he's not so...
No problem, no problem. Take your time. All right, so let me let's go look at that chart. But the same, it's the dollar CAD that Anastasiia was talking about, and perhaps I can do an overview or an analysis of what I see on the technical perspective, on the technical side of things. So I'm going to are you? I see you come back, Anastasiia.
I'm back already. Yeah.
Interrupt me anytime you want.
I'm gonna continue quickly, right? You have okay. We have a screen back. Thank you for giving me a second. So what I was saying about USD cut is that I'm gonna be waiting for the interest rate decision from Canada, but also potentially from the US dollar. Because when we are trading inside of consolidation, right? And consolidation is usually the volume accumulation again. It means there is a chance of 50-50 always, whether we go up or down, just from the technical perspective. Now, the uncertainty about the Trump tariffs, the fact that we already had the interest rate cut several times, right? It already gives also us their chance of rather equal, both of continuation to the upside as we had so far, but also the reversal. Now, with the DXY going up, I'm rather expecting that we might reverse back from the same zone again. But to be honest with you, I really never trade such a thing after we get stuck in the consolidation already from the end of the 2024, because, well, it's the longer consolidation goes, in my personal opinion, the higher there is a chance to get in the trade the moment it's gonna break outside of this consolidation. It's just how it happens always with me. So that's why I always stay away from this kind of things.
I see. I see. You're actually illustrating. I think something that many traders have seen. Right. It being a breakout trader is quite difficult.
Yeah, it is quite difficult. Also, there is a strategy of kind of you wait for the breakout, you wait for the retest, and you buy. But all the traders who trade such a strategy would already be caught on the stop losses here when the price broke outside, and here when the price broke outside above. So if you trade break and retest, you need to really have the clearly defined on how much you're expecting something to break outside of the consolidation before you enter the trade. I shared it before on the previous stream, but I'm actually going to say it again. I always wait for approximately 70 to 80% out, like get out of the consolidation, break out of consolidation before I enter the trade again. So if my consolidation size without this fake outs up and down is 180 pips, 185, I'm going to be expecting the price to break outside for at least 120, 130 pips before I enter the trade. So that would mean that I wouldn't go in long until we are approximately 870 to 880, 890 something, just because there is still a high chance that the price might reverse back inside of consolidation. And the same back to the downside.
That is a very nice rule. Do you apply this for all consolidations, or only you do?
For all consolidations, yeah.
Wow. So okay, so that's perfect. That's a very nice example of a good rule to save you from being faked out, or faked to take the trade, a breakout, a fake breakout, um, because it happens so often, right? Those liquidity sweeps, as we call them, where price comes and makes you think, it comes with a lot of momentum, makes you think this is the breakout, this is my profit, only to find out it isn't. It just goes back into where it where it came from, and likely to be hitting your stop loss. So you wait. So you measure the width of the consolidation, and you use 100% that distance you use for the breakout. For confirmation,
70 to 80% of the whole size of the consolidation.
70 to 80.
So let's say the consolidation is 100 pips from
Yes.
top to bottom, plus minus, right? We don't need like up to counting a pip. I'm going to wait until the price breaks out 70 to 80 pips before I consider taking a next trade.
Perfect. Right. So 70 to 80% of the width.
Yeah.
I don't. This is not meant as an invitation for people in the audience to copy such a rule necessarily to in detail, but it is the idea of how the approach, the technique, the that that you're actually using a rule based on to help you filter out the fake out moves, and you're not doing it randomly, or you're doing it related to the volume or the ranges that the market already shown us when it was forming that consolidation, which is you're taking price action information. So that consolidation can be wider, can be narrower, and you will be acting upon so the rule is volatility based. It's based on ranges, which is a sign of another form of volatility, another metric of volatility. I like that a lot, and I think it's a very helpful rule. Great stuff. So
I figured this rule out after I also back tested that the size of the fake out, so the weeks, which still return back inside of the consolidation, are usually up to 50% of the size of consolidation. So this week can go usually approximately up to a 50%, and then still come back. And then if the price goes outside of 70%, 80%, then it usually never comes back inside of consolidation so quickly.
Now, that is useful information that anyone can use to improve or build their system upon. That kind of information where you have the statistics. Thank you very much for that, Anastasia, for having statistics that is based on data. In this case, everyone listening, don't copy it. Go do your own due diligence, do your backtesting, and to get those statistics, as Anastasia has. But it is these kinds of information that will give you edge. Knowing, not guessing, knowing that it needs to go exceed a certain distance, and that distance is a in relation to the consolidation, and it needs to exceed a certain level before you can actually before you can know if it does, if it exceeds it, it means something in terms of probability. It means that something is more likely to happen or less likely to happen. That is actionable information for that's edge right there. That's how how I extract profit basically as well. That's how we do it, right? We
That's
identify those patterns,
yeah.
right? And we know the probabilities of one thing or the other happening. And once you have that, it becomes much more easier and less stressful because you just follow your rules, which are based on the data.
Yeah, it's actually important to mention that it applies to all the time frames, perhaps besides daily and weekly, because obviously the daily consolidation counts thousands of pips. I'm not gonna be waiting until the price, gets outside for like 700, 800 pips because I'm gonna be taking trades in between the moves, right? My take profit is not so big. But it applies for every other time frame for 5 minute, 15, 30-minute, hourly consolidation, 4 hours consolidation as well. And I think it's so important to know how do you, within your trading system, act when the market is consolidating. Because if we look, and I did this test, like I ran it, I calculated it on different markets, approximately 75 to 77% of time the price spends consolidating, and only
Okay.
20-25% of time the price actually makes an impulsive move if we talk about 30 minute to 1 hour time frame. So that's for intraday swing traders. That's a very important information to know, because
Of
essentially
course.
it also can count, it also can be transformed into hey, 70 to 80% of time we just wait, and only 20 to 25% of time we actually trade, we execute, we make money. And patience is so important because majority of time the price consolidates. And now it's also important to know, what do I do when the price consolidates? Do I have an edge? Do I have a system to trade inside of consolidation? Or does my system tell me to stay away? Because a lot of traders, especially beginner ones, and I did this mistake as well when I was starting learning how to trade, I did not realize that I need something that works in different market cycles, in different market timings, right? And we have different ones. We have the uptrend, we have downtrend, and we have the consolidating market, and they constantly change each other. Now we have a system that works only in one of the cycles. I need to know about it, because if I'm going to take something that works only in trading market and apply it in the consolidating market, well, that's going to be really painful, because I'm going to be losing, and I'm going to be like, why is the market hating me today? Well, so it's because I lack the data, I lack the structure, I don't know what I'm doing 100%. I'm not sure about my own strategy performance, right? So it's so important. And if I don't have the system that works inside of consolidation, I stay away. Now, I trade volumes and footprint and everything, right? It does not work inside of consolidation. Footprint still does. Now, volumes do not, because volume is consolidation also, right? Not always, but also. So if I'm going to trade inside of, like, I'm going to try to see the price rejecting volumes, respecting them. I'm going to try to trade from big volume levels. In consolidation, I'm going to be losing because the whole consolidation is a huge volume zone. So I'm trading not from it, I'm trading inside of it, which doesn't make sense and goes against my own logic of the trading system. So it's very important to know when is your trading edge working and when you need to stay away. And if like USD cut now is consolidating, I'm staying away from it because my trading edge is not applied to this specific market conditions.
I think that is so true. Knowing what kind of market we are in, what market conditions we are in, that is, as you said, you got to know. It's like you got to know when we need to use realize that our strategies are like instruments for a specific condition. right? You can't have a hammer and expect to drive a screw with that. It doesn't work like that. It's the same thing with your strategies. If you have a breakout strategy, you need to have the conducive circumstances for that strategy to be profitable. Or if you have a mean reversion strategy, and I personally I like that data point you just mentioned, that 75 to 77% of the time it is not breaking out. It's just consolidating. And in those cases, a mean reversion would make complete sense to be using a strategy, that where prices reverting to some kind of a mean instead of, expecting that breakout.
Yeah. So yeah, it's only this small period of time when the price actually moves in between these consolidations, right? So it's we just need to know this, right, about the hour cycle, as Haresh says, because it gives us the confidence also. Am I supposed to be waiting now? Am I supposed to be trading? And it also saves us from over trading, because we exactly know when it's a time to stay away and when it's a time to focus, lock in, and try to find some worthwhile market opportunities. So yeah,
And when to go fishing, as
yeah,
according to
exactly.
Enrique.
Yeah. I like the analogy.
Yeah, it is. It is. It's a nice way to putting it.
Yeah.
Before we continue, the statistic you just mentioned, the probability of 75 to 77% of the time the market is consolidating, on what instrument was that? Is that on the Forex, or is that on
It
what
was
was
both
it?
on the Forex and both on the indices.
Okay, that's
So it was
surprising.
both S&P 500 and Forex. It was a couple of years ago. I was backtesting. I backtested a couple of Forex pairs. To be honest with you, I need to pull up the Excel file to remember which ones. But it was several Forex pairs, and it was S&P 500.
Nice.
Approximately.
I I would expect that it was more true to Forex pairs and less so for the S&P, since it has a tendency to have a stronger trend on the when you zoom out, not daily, but I mean when we zoom out, it tends to actually have a much stronger trend compared to the Forex. But even then, you say the S&P as well, it consolidates more often than breaking out. And in the background, we have someone who is joining us shortly. I'll have anyone in the chat guess who it is.
It's not hard, is it? I always come in late.
Hey, Alex.
Hey, how's it doing, Nick? How's everyone doing? You all right? Gosh.
Yes, we are. How are you doing today, Alex?
I'm doing fine. I could do better. I was actually long GU for some reason today.
True.
I got clipped. So
Every time I feel Alex joins, we have an opposite trades with him. For some reason.
Oh, really? Why? You guys on the short side?
I'm on the
Very
short side.
nice. Very nice. No, I can talk about why I got into that trade and why I was wrong on it in a minute. But what's going on? How's everybody doing?
We're doing fine. We're glad you joined us.
Oh yeah.
Yes, we are. So we were looking at, we have of course the CAD news coming out in about 40 minutes. The interest rate decision for the Canadian dollar, and we were talking a lot about the macro opinions and the implications and Trump and so on. So it's I think it's as we have been saying since the beginning of this year, and actually last year, since Trump was already, it was known that Trump won the election. It's an exciting time. I know we keep saying it, but it is exciting to all those big moves, potential big moves coming up and happening as we speak. Fed not probably not cutting, most likely not cutting rate. It has to do with Trump winning, right? So yeah, I like I like these times a lot.
Yeah.
Victor, can I follow up on what you said about the S&P 500 before we move on?
Perfect. Yes.
Because we're talking about the 75 to 77% of time the price actually consolidates, and only approximately 25% of time it actually moves, right? And we're talking about what is the statistics apply to the Forex or indices as well. And this is S&P 500, and this is 1 hour time frame. S&P 500, in fact, moves a lot. And if you look at the daily time frame, it seems like it's constantly going, right? But if we look at what we trade as an intraday traders, when it moves really fast majority of the time, but still most of the timeline, it stays inside of the consolidation. So I just highlighted this was the past couple of days, right? The half of January, but it moved a lot, right? It was bringing good moves, but only in between the consolidation. And it was just a couple of candles and the move is done. And then it's again wait, and it's again consolidate. And so that's also, I also tested this a couple of years ago, and it seems like it's still the same. So still 70%, I would say for sure we are consolidating. So again, brings us back to knowing what do we do in this kind of situation? Do we wait? Do we trade? Is there a trading system for us that works inside of the consolidation? Or should we just switch to the different instrument perhaps? Or should we just stay back and wait until the market gives us a good opportunity which works with our edge that we apply? So.
I like that. I like that a lot, because when we don't have data, right? We need to guess since we don't have the information. And one, knowing that Forex doesn't move that much compared to equities. When you just look at the daily chart of the equities, you see just as a straight line going upwards sloping line. You would, if you had to guess, you would say the S&P is less of a mean the period of time that it stays in a consolidation would be less than the Forex. But by having the data, you can come to actually the truth, if we may say so, right? You actually have something to base your actions upon, and you're not guessing anymore. And so having the data avoids making decisions that are based on hunches or seemingly but seemingly valid logic, right? My logic, which was S&P would probably not be as consolidating as Forex, was that logic seems quite valid or reasonable. However, the data doesn't support it, and I like that a lot. I like that how you do that. I think that's a great example of how many things, and I'm sure this is true for many of us. If we don't have the data about it, it's kind of dangerous to act upon your expectation by guessing what seems reasonable. You actually need to go and find some kind of data to base your decisions on. I like that a lot.
Yeah, some things may seem logical, but in the end of the day, until we have the black and white information that it works, acting upon it is just going to be like flipping a coin up, and it's acting upon what side of the coin falls, back on. Because I was really stubborn towards not backtesting, because it's boring, but I really, with full my heart, can say that my results changed when actually I started backtesting and seeing the statistics before applying something. And it helped me also to detach from the results of several trades, even if it's a losing streak of a couple of trades or even a week. I know that it's just based on the statistics that in the end of the month, in the end of the longer period of time, I'm going to be in profit, right? And it also helps me to detach from the immediate results and not get emotional when things like this happen. And I feel this also what I lacked in the beginning, and what a lot of traders fall in as a trap, is because we focus so much as on this specific trade, on this specific 2-3 losing streaks in a row, that we lose the belief in our own trading system and confidence in the skills, and that the system still performs in the market. And instead of sticking to this, right, and continuously step by step, focus on one good trade at a time, continuing to progress, we start going left and right, applying different indicators, potentially changing the trading strategy completely, going to completely different assets because they just moved so much, and we saw like plus 10, 15%, of someone's account that someone posted, and we just get completely off from our own system that in the long run would actually give us results. And majority of the time, the funny thing about it is that we're gonna take 1, 2, 3 losing trades with this system, and then we're gonna lose it. We're gonna take a random trade, whether it's with our system, the next trade would actually be a winning one. So we usually stop following our own rules right before they would start performing back because we lose it too fast. This is what I found out about myself, So now I just calm down and I stick to it until, it gets back on track, because I know eventually it always does.
Yeah, I
Yes,
can
well
totally
said.
agree with that one.
Yeah, strategy hopping is a common thing among beginners and also not so beginning traders. Unfortunately. So, what are you looking at, Alex?
To be honest, there's nothing really really good at the moment. I think most of the moves at the moment have already happened. If you're going to get into any kind of move, it was the start of London. And looking at gold, maybe gold has some potential just to go a little bit further up. But other than that, there's pretty much nothing that really fits in the things that I look for. So I think this is going to be more of a relaxing stream, to be honest.
Maybe I can
Have
show you. You mentioned gold.
you guys gone through gold and stuff like that already?
No, we haven't. No, we haven't. Maybe we should, because I do see we talked about gold yesterday, and I do see perhaps, if I may, Anastasia, put my screen on. There you are. We talked about this yesterday, where we have on the weekly time frame, we have on the higher time frame, we have reasons to believe that this eventually will be broken, and by this I mean the bearish quasi that we have on the daily time frame, because on the weekly we have enough reasons to believe that it's going to continue, eventually be ending up much higher than it is right now and breaking that reversal pattern. However, in the recent and the near future, it is reacting as if there is going to be some kind of a push down coming up. And by that, we were looking at, I'm having difficulty to move the tools. Yes, we have gold reacting to that entry order block on the daily very nicely, and creating a fresh order block, which is to me an invitation to look for that short on the lower time frames, right? On the hourlies, and perhaps target this structure or some other structure we have below us, or just as a day trade. If we go to the lower time frame, actually I had this on from, I believe this was I'm not sure if it was in Discord workshop, or it was on the YouTube. I think it was on YouTube that I put this possible setup on. Not that it's not a trade that I took. It just if price were to get this level, and this is the order block that I was referring to when we talked about it. Price had, I believe, they were just breaking that neckline. And we now have the quasi right at that place where we wanted or we needed to be. What we have is this is the quasi that we're talking about, right? The left shoulder, the head, the break of the neckline, and it's coming back to some structure of relevance in the relevant time frame, that being the H4. What does it do there? And that's, to me, that's the confirmation. I don't mean that this is a trade that I'm going to be taking right away. It depends on your own trade plan, but this could be an example of what I'm looking for. I'm looking at how does price behave as it gets into that area of interest. Does it keep on creating those bullish structures or not. Because if it is, then logically it's not going to be moving downwards if it is still creating bullish structures. It shouldn't be, right? Bullish structures are, of course, for price to keep on. They're building blocks. They're steps for price to keep on going higher. So if I see this, what do I see? If we zoom in on gold, we have we have two order blocks, by the way, and this is the first one. We don't have alignment yet on more than one hourly. However, just by looking at the H4 without going any deeper, we see we have another order block being created within, as we get back to that entry order block on the quasi, this order block, I mean, as we got into that area, price, what does price do? It creates an order block, a fresh one, right? It is fresh when it is retested, and that's exactly what it does. Price comes back in the next bar, this bar, right? That bar, it comes back into that order block and leaves that wick behind, right? That could be a confirmation of not only this is a great place to be selling gold, gold is also acting as if it really wants to go down, as if the sellers are indeed coming to the market and pushing it. This could be a sign or a signal for some trade plan. It doesn't mean it's guaranteed to go down, but that is how you build a trade plan, by using price action and confirmation when price gets to that area. So that's on the H4. If we go looking lower, we can look for perhaps some confluence on that area, on that H4 area, and we still have actually already had this area, but we still have another area that could be used for a retest. This is the H2, and you can build a system, of course, upon these kind of ideas. That's the H2, and there is actually this area on the H1 would have been a very nice place where you have confluence as price was coming in. It was also coming into an H1 order block, right? That would be a nice entry, and because you have these tight areas in front of you, you can have a reasonably tight entry, because you don't if it goes above this structure, it's invalidated, right? So you don't have to have your stop loss much further down just to catch, just to accommodate the volatility, and especially gold. You need to do that adequately, and you would be able to target at least the low of that structure, but possibly even lower, and just let the probabilities play out. Whether you win or lose is at that moment out of your control. You only control where you enter and the setups you choose, but the actual result is a thing of probabilities. So I think this is a great this could be a great short for gold, and because we have on the higher time frame, it is very bullish on the weekly. That is, I wouldn't hold this for a long time. I would take it to the very first, on the higher time frame, that is on the daily time frame, the very first FTA. You can still hold it longer than a bar on the daily, but not too long. Don't be a hero thinking, no, this is the moment to short it because it's going to go way lower, because the weekly time frame doesn't support that, right? The weekly tells us that this is likely, if anything, if it comes down, it's only going to be a retracement in a continuation later on. So that's gold, and perhaps we could go to EU and see what's happening. And maybe perhaps afterwards you can show us the trade, Alex, the pound. Why you?
Oh yeah, you want me to show you the trade? Okay, I can show you that trade.
Well, maybe not the trade, but the reasoning behind
I'm only messing. I'm only playing about. Let me pull up. Let me get this off.
Not right away, but I mean later on, because
later on. Okay.
Because there is. I suppose there was a setup there. It didn't work out, but I mean that's
yeah. It's not like me to just get into random trades for no reason, just like getting into a trade. No, I'm only joking. There was a valid reason, but once it failed, then it was pretty obvious the reasons why it failed. So it was a good trade. It was a decent good.
All about knowing whether it was a good loss or bad loss, right? If you,
I'm happy with that loss. You know, I've been, you know, I've had worse trades. You know, where I've traded. This was okay. This wasn't a bad loss. But
Great. Oh, it's up to you. I'll leave the door open if you want to elaborate on that setup. But let's look at EU. What do we have? Or perhaps Anastasiia, maybe if you don't mind, maybe we can look at EU, since you, the same way as I am, we focus on EU and GU a lot. Maybe we can have a look at how the how the volume profile looks for EU. Where would be the entry, the areas where you'll be interested, the point of control, and things that the people in the audience could perhaps consider to look up according to their rules, to see if they concur or not with your views. You are muted, Anastasiia.
Yes, of course.
Okay.
I'm actually an EU trade.
You are in a EU trade.
Yeah, I am in the EU trade, and it's coming back to the very interesting point right now. So I think it's going to be quite interesting for people to see. Now, I'm waiting for the short on EU, and it would be actually more visible even on the futures. However, what we see here is, first of all, we had yesterday the drop after we couldn't break 105, 150 level. Now, when the price dropped back before the continuation, it accumulated lots of volume, right? So we had a huge volume accumulation. Now, I don't necessarily think we're going to come back all the way to this accumulation of the volume, because we have a news coming, which I'm most likely going to give some price boost already. So I'm not necessarily waiting for the price to go back to this block of volume, neither this one. But in fact, what we need to recognize that it is there, right? We have this block of volume 1. And yesterday I had already thinking that, okay, the price still might go up because we were holding the previous volume. As we can see, we have the point of control right here, right? So one of my favorite setups, we talked about it with Alex last week. I'm never going to be tired of repeating it. It's very simple. We have the impulse, we have the consolidation, we have the impulse. When the price comes back to the consolidation, we wait for long. Now, the reason I didn't is because we have the interest rate decision today, and I just got out on break-even of this long setup. So it was closed on break-even after the price went up. Now, what we see here is the opposite situation, but nonetheless, the same interesting situation. We have the impulse, we have the consolidation, we have the impulse. So technically, my entry point is where this consolidation is, because this is where the majority of the volume was traded. So based on the volume profile, it suggests that the price shouldn't be breaking above this level, which is, I'm going to put it on the screen, 104,300. Okay, so we shouldn't go above, we shouldn't see the price of EU going above the 104,300. I don't necessarily think we're going to come back there, first of all, because we have a high volatility events. Now, secondly, because the price already kind of rejected it. It was still already inside of this consolidation. 1 second. Here. But we had already rejection. What is interesting now is that on the smaller time frame, and I like when my confirmations are just aligned on multiple time frames in a row, because it just gives me so much more confidence in the setup. If I place my volume profile on the last downwards movement, we will see exactly the same thing. We have the huge block of volume right here, right? So this is where the price rejected, was rejecting it, accumulating the volume, and where I'm expecting it to reject right now from. So my entry is almost at the same place. It's a little bit higher, but nonetheless, it's a quite interesting point I find to enter the trade, because the point of control of it is at this very moment at 104,17017. minus a couple of pips for the mistake of the price. It doesn't always come back perfectly to the point of control, of course, which gives us a good entry point approximately from now to the zone 104.015, somewhere like this. My stop loss, though, I would still place above the previous volume zone, because equally, as much as there is a chance that because of the interest rate decision, the price is not going to go there at all, there is equally a chance that there might be a week, and then we will see the drop. So I'm waiting for the move to the downside for euro. I'm already in the trade, but it's almost back at this break even. With a stop loss at 0.445. So, and my goal that I'm looking for is at 0.3020 for the same exact reason, because the next consolidation, the next big block of volume is only here, right? Yeah. So the block of volume, perhaps maybe if I want to be really safe with this trade, can take a potential take profit a little earlier at 0.3090 because of the tiny consolidation that was here as well, but definitely not earlier, well, because just there is nothing else. There is this only other zone that is might stop the prices below, right here. So we'll see that we had a week, we had some kind of rejection here, but for the rest, we had the consolidation here, and the price is already below it. We have the recent consolidation, the price is also below it. And as much as the price is below the majority of volume, I'm going to be looking for the short. And because it's so close to those volumes above, it also gives us quite a good potential in this move, which is approximately 1 to 2, a little bit more risk to reward in this case.
I think that's a very, very valid setup, to be honest. I don't know. I can look at. It looks like he wants to take definitely a leg down, but it looks to me like it's coming into like these, like a lot of areas of demand and a lot of like areas of support. So that's the only reason why I wouldn't have taken it short. But I was definitely wrong. I thought pound this morning was actually going to go up a little bit more before coming down. So definitely, it's showing its weakness. Pound is super weak.
I wasn't pound yesterday, but it hit my break even at night.
Oh yeah.
So yeah, I think I had similar setup as you, but I got out earlier.
Wow. Where were you? You were long or short?
I was long before it broke the downside. I hit my break even, and then I was okay because everything is above now, all the volumes, everything, it broke down the volume. GU is quite similar actually. I have the same outlook for GU.
Yeah.
So yeah, and then I was like, okay, here potentially was long.
Yeah.
Because the price was above all of these volumes, and then it hit my break even, and I was like, okay, now.
I think we were in the same trade then, because I was thinking before it would take a leg down, it's gonna like trickle upwards and maybe hit the highs up there. But this morning, I'll show you what the thought was behind it, and it's kind of pretty obvious looking at it why it didn't work out. Let me make sure I'm picking the right. Wow, my screen is massive. Let me let's just fix that just because there you go. Sorry guys, 2 secs. So we were trading up here. This is where we were trading at. And what I was looking at was basically the reclaim of all of these EMAs, and it just looked like it was going to push up and take out some of these highs. Now, recently, with a lot, what I'm seeing on the fibs as well, 618 and the 618 and the 66 levels on the fibs have been getting hit quite a lot recently. So this small area here found as support. I was thinking that we were going to trickle up and just basically do something like that, take out all of these highs, get into that 618 level, and then just start breaking down further into that leg. But my stop was underneath these lows. I wasn't planning, if it was going to break down, it was going to break down there, and I didn't want to be into the trade. So it was a good place to put the stop. And obviously after that, you just saw it just came down and basically took me out very quickly, which I prefer, getting taken out really quickly instead of being in a trade that just drags me all day for no reason. Looking at the reasons why it probably broke down is obvious. It's super easy. We're hitting this macro kind of leg down. We're now hitting that 50 mark. The 618 is up here. We also had a little bit of a head and shoulders as well. So we've got that type of distribution type of pattern as well. So it's kind of obvious that the likelihood of it going down was more, but I decided I was going to punt to push it long instead. So it was a quick trade and I'm out of it. But other than that, I don't see, if I was going to get short now, where would I want to get short? And I don't think I've got an area to get short until we come and check this area here. That's all I'm thinking. Look at the day, there is hidden divergence.
I just realized I was muted. Of course, no one noticed because, of course, you can't see my whole face. Harish asked if you use divergence in your trade.
I don't really use hidden divergence. I actually use, I definitely use divergence. Hidden divergence, I don't really use at all. Probably because my eyes are just not good at seeing hidden divergences. It's super easy to find divergences, but yeah, I definitely use them. Like you've got, let's have a look here, pretty solid divergence right there. So up here, a pretty solid divergence. You've got equal highs nearly on the MACD. I would say that was a divergence as well. Got it also on the signal lines. So you can definitely use them. You can kind of see when price is starting to get exhausted though. It's coming up, it's not really pushing very high. You've had these kind of equal highs here and then drop down. It's not, you don't really need the oscillators to see that price is slowing down, but definitely divergences are good.
Nice. There's a question about by Hamid, if I'm not mistaken, from Anastasiia, about the equities. Do you have any idea how, if the Fed, they leave the rate as they if they hold on their rate decision on changing the rate, what would happen to the equities?
Yeah, we talked about this in the beginning, but essentially if they hold the rate, that means that they are still looking for what's effect gonna the Trump's policies bring, and that's not the positive outlook. And if it's a more positive outlook, most likely we're gonna see the bearish reaction from the equities, because, well, if they would see the positive outcome from Trump's policies and Trump's tariffs, and essentially he's, how he's gonna move their policies with other countries, then it would be a continuation of the rate cuts. But since if they hold the rates, it's the opposite, well, we most likely going to see the bearish reaction as well. We can see it from the price action as well, from the technical aspect, because what we see here for the indices is simply, again, we had the consolidation here on top, right? And the price is just trying to break outside of this consolidation to the downside. So I would assume that from this consolidation, we are most likely going down. And well, if looking just purely from the volume perspective, then it's at least here. So 6025, 6014 zone to the point of control. It was already tested. So let's say 6,000 for S&P 500. But essentially, yeah, well, I'm looking for the short, rather outlook after today's interest rate decision from the Fed. Because again, what is the likelihood if they only have 1 to 2 interest rate cut this year planned? What the likelihood has been happening right after Trump took the presidential office without knowing which effects it's going to bring? It's quite small, you know? So
yeah, that makes a lot of sense.
I think there's a possible
Alright.
long trade on gold though. If you're looking for an intraday
Really?
kind of, yeah, I think so. If you're looking for it to take your highs, getting in 27.59, getting out at 27.66.
Okay.
Let's have a look.
Basically, that's yeah, that's oh, I see why you want to go long. It makes a lot of sense in terms of the EMAs.
Yeah, in terms of the EMAs, we also had this little push. We've still got this high that looks like it can be taken. If it was going to go down, it would have gone down right now, and it hasn't gone down. So,
well, in 22 minutes, we are going to have the H4 candle close, and I think that could give you a good indication of where the price is going to go for the next couple of hours. A lot of depends on the rate decision cut as well, because of course gold can move on that decision by a lot. But if we close in 22 minutes as a bullish engulfing, then it makes sense to be looking for that long.
Rate decision is in 7.
Rate decision in 7 minutes
From Canadian bank. Yeah, it's
Canadian.
Oh, gosh, Anastasiia, don't do that to me, okay? Thank you there. That was a good squawk. That was good. I really like that. I really like telling me, but I was like, wait, have I got this wrong right now? Just got into a trade and the rates are coming in. No.
Forget about
that. Was a good one.
You got in the trade.
Yeah, no, I definitely got into the trade. Yeah, I got into the trade at this level, which was on the lower time frames. It 5 minute doesn't look the best. On the 15 minute, it looks much cleaner.
That was a good scare, Anastasiia. Well done.
I know. I was like, what? How has it been missed? It's we'll see what happens with this one.
All right, so 7 o'clock UTC time, PM, 7 PM, the rate decision, rate cut or rate decision, I should say. It's not we don't know yet if it's going to be a cut. We don't think it's going to be a cut. But still, before that news, usually the markets tend to have a waiting stance, right? They don't choose direction by a lot. They drift towards one area or not, but they won't have like impulsive moves because it's risky to take a decision before the news actually comes out. So all the move is sort of collected, saved for after the news, after the decision comes out. We have 20 minutes for that H4 order block. Let's see. Yes, for that the H4 order block to close, and it's going to be close because it's right there. Whether or not I'm going to show my chart for a little bit, Alex, if you permit me. As you can see, we have a this is the reversal pattern that I was talking about, which is the basis of why I think there is a good chance that the price might do something similar to this, not necessarily exactly like that. I mean, it can still keep on printing candles here for some time, not necessarily go down right away. And that could be something for tomorrow. It can even squeeze and go higher. The quasi doesn't tell me where exactly. It just gives me options, right? This area or that one. So it doesn't mean nothing is certain in trading. But that's the reason why I think there could be a short from here. But even while saying that, the trades Alex take, they are much shorter time frame. He's only going for a tiny I say tiny, but I mean on his time frame it's not tiny. But on the H4 they are, they're closer by, so, and that move can happen well within the order block on the H4, right within the area I'm trying to look for a short. While I wait for that short, um, you know price can offer us many opportunities, including the one Alex is considering. The what I was talking about was this H4, which is, is closing in about 18 minutes, and that usually gives you a good indication of what's to come. Not like 2 minutes ago, it was showing an engulfing. I know it's very close to each other, but still, that's the net results of those two 4 hours. Who won, right? If the who is in control, that's what creates those structures, those bullish engulfings, and not. And actually, there's another thing we can look at is if we were to close like this right now, you would see in a way they are, a mirror image of each other, right? The bearish bar, that pin bar, and the bullish one, right? The bodies aren't mirror images of each other, but the ranges and the wick, the direction of the wick and the length it is, that tells you something. That means, indecisions. When you have equal wicks on each side, the price is not really going anywhere. It's going up, coming back down, creating that bearish wick, and going down, coming back up to basically the same place it started. That's indecision. So that's another sign that the market is waiting for the news of, later on. So it's kind of tricky, and I suppose since this setup is on a higher time frame, right? We're on the H4. Um, it is something. It is wise to wait for the rate decision before taking any decisions. That's what I wanted to show, the engulfing that is almost it's not almost, it is showing from time to time, and depending on that we can get an indication of what what has a little bit more probability of happening, but still, because it's before the news, it's wise to either take short trades, not short in direction, but I mean short duration, like quick in and out before the news, or not trade at all, because with the news it's a quite of a gamble to enter before the news.
Yeah, agreed. We'll see what's happening. At the moment, I got my stop quite tight, just under that last low right here. What's going on with my mic? So that's quite a big candle right there. So we'll see what happens. Maybe
it's right below the recent low.
My stop loss is really tight. Yeah, super tight.
Which is typical, right? Because you trade big lots, tight stop
losses. Yeah. It's, let's say, so the move, if you're looking for a bigger move, it would have been something like that, and you would have had your stop loss underneath this right here. I'm not trading this particular move though. I'm trading that move. So my stop is actually under here. So me personally, I don't want to be in this trade if it comes down and breaks that, which to be honest, it looks like it, but that is the trade. I love how when I get into trade, Anastasiia just starts smiling.
Just love it. It just gets so more exciting, the whole stream suddenly.
I would, yeah. Let's have a look.
Someone is asking about USD CAD, guys. We discussed USD CAD, but since it's just consolidating, we decided that it's better perhaps to wait until the interest rate decisions come out, both for essentially USD CAD, which is, well, for Canadian dollar, right, which is right now, and also for USD. 8 p.m. Central European time. So yeah, well, interesting. What's there for the Canadian dollar though now?
Canadian dollar? Do you want to just pull up a chart and?
I'm looking for the decision for the interest rate now. Okay, so they
held.
cut straight. No, they
Wow.
did they
Oh,
help?
they cut. They cut. No, I'm sorry.
Yeah,
They did cut.
there you
It
go.
was
Let's
according
go,
to the
baby.
forecast.
Yeah. According to the forecast, they actually did cut the interest rate decision.
Ooh.
I'm gonna open perhaps the trading economics now. I always use trading economics for all my macro outlook.
What's it called? Trade economics.
Trading economics, yeah.
Trading economics.
Where is it? Here we go. I love it just because there is just so much information, and if you don't understand a lot of things, it just happens to explain it quite in easy words.
I'm going to show your screen.
Yeah, if you can, yeah. Thank you.
I love how volatile gold is. It's just ridiculous.
I like how you put "I love it" and "ridiculous" at one sentence about gold.
You gotta find the beauty in life, It's horrible and lovely at the same time.
They have a quite quick updates as well. So here the 3% the interest rate decision was as consensus. So they kept cutting it. Quite interesting, right? Including the situation with Trump. But for them, actually, it's a logical decision now. For Federal Reserve, perhaps, as we can see, the expectation is that they're going to hold it this time. And so we still have some time until that. But there is a press conference coming quite soon, also in 45 minutes from now. Well, depending on what they're going to say, that's also going to affect US dollar, because if they mention the tariffs that are going to come out from, Trump's policies, then
That's
also...
Yeah, I was like, say goodbye to any shorts on EU if he starts talking about these tariffs and that he's not gonna make them happen.
Yeah,
EU's gonna be crazy.
There we go. So they have like a quick outlook of what was happening as well. So for everyone who wants to catch up with some, what's been happening with macro and where it was going, where it's going now, what is the decision, trading economics gives such quite good insights. I really love them. And if you click on here, they give like an overall look of the recent events that was happening, which is also quite useful. And here you can choose by countries, by the markets. For example, if you're interested in stocks, they're going to give the specific outlooks for the stocks, commodities, currencies. It cuts a lot of time into searching it all over the internet. Instead of like Bloomberg, Wall Street Journal and everything, they also give an unbiased opinions. Whether it's Journal, Bloomberg, they also, I feel like, trying to sell you the news more than give you the information what actually happened. Because obviously, they need the views and they need people to read it. Trading economics is most unbiased and clear about everything that they say too. Well, I'm still in short, so hopefully we're gonna hear some good things today.
Nice.
And just for the record, Anastasiia is not related to trading economics at all. It's an honest opinion on on the website.
Not related.
Right. She's the CEO, guys. This was a shill all along.
Gold is up and down, volatile
just
as it.
Around my entry levels, to be honest. It's those wicks as well on 15-minute. Horrible. I'm not gonna lie.
Gold is not testing the order block. Gold is testing Alex.
Ooh, lovely. I like that. That was interesting. Nice. I see what you did there, Victor. I see what you did there. Yeah, it still hasn't come down to my stop loss, so we're all good. It doesn't look the best now. Now we're looking at it, but it's
on the lower time frame. I can see I can see gold going up. On the 5 minute, it makes a lot of sense. It looks like a bullish reversal to me on the 5 minute too. I would, if I didn't have the higher time frame, I would definitely go long this. I could go long this at current levels.
Alex, can you pull up your chart? Where is your TP on gold? What are you looking at as a goal?
So on the 15, all these made lovely wicks to the upside. These looked really good candles, but what can I say? It's not looking too good at the moment. It looks like it will come down to get me.
I also see, if you're looking from the small time frame, it makes sense from the long perspective. Actually,
It would make. Do you know what it would have been much better and much nicer if we had a close and a push up and then a retest and a continuation. But this oscillation around this particular area isn't. Use the MER indicator, Alex. Okay, you know what? Yes, that is exactly what we're going to do. And it is going to, we're going to have to bring out Gandalf as well before we do this. Sorry, guys. There's somebody, Victor, have you deleted Gandalf off the sounds?
No, I haven't. It's
That's
not there?
a shame. Gandalf has disappeared, yeah.
No, I had nothing to do with that.
Okay, fine. Somebody's been playing in here. But yeah, we're using the MER indicator. And Anastasiia, if you don't know what this is a 99% win rate indicator that we've used. We've only lost once on it, and that's when Trump opened his mouth. But so on the 5 minute, it still looks good. If we can break above all of these EMAs and actually close above these EMAs, I'd be much happier. But we've got 6 minutes of this playing around with us until it actually does something.
Look, since
6 minutes, that is for the close of the one.
Yeah, thou shalt not pass. I've got a computer.
Since you put MER there, it came back to your break even almost.
I told you, yeah. Almost. Okay. No, it's not here. So quiet. Everybody's concentrating now.
Don't you love it when we have those quiet moments?
I prefer it when it's like quiet moments when it's in profit.
Everyone is expecting, is waiting, listening to what is happening, and we are keeping quiet.
Yeah,
it's like a game.
So excited. You were not the one who is in the trade, you know? Alex is?
It's like
that's it. That is
the elevator music as well. It's so fitting, you know.
All right, so maybe I can. Well, I think for gold, it's a matter of waiting for more data. I don't have anything in terms of. Maybe I should put my screen on. I don't have anything. You can't force, price action to deliver what you want at the moment you want. It's more of a waiting game. You wait for price action to tell you. So you're more of a passive actor in the process, and that's exactly what is happening right now, right? We need to wait for price to tell us what it wants to do. Of course, Alex is already in the trade, but it depends on, of course, your setup, right? What kind of trader you are. And we're still there showing and engulfing from time to time. So we don't have anything, price hasn't told us anything since the last couple of minutes, at least not in my opinion. I went to look on the lower time frame to see if I see a nice reversal pattern. And of course, yes, I see that quasi. I mean, it's very easy to see that quasi, right? We do see lower lows and lower highs until it breaks that neckline, and is now from time to time is coming back to some structure below, and possibly for that reversal. That's why I like on the lower time frames. I do like this idea, but it hasn't materialized yet, and it's only on the higher time frame. I see of course, what I mentioned already, the higher, the quasi, the bearish quasi. So we'll have to wait. The bearish quasi, maybe both of them are right. Maybe on the 5-minute we are going to have a push, right? May or not, take that order block out, and then because the quasi that I mentioned is on the H4. Let's not forget that an H4 quasi structure that long, right? It can have many bars. You shouldn't expect that to happen in, the next hour necessarily. It can take many bars before it signals, and then many bars again before it actually runs. Many bars on H4, we're talking about easily a couple of days. So, but of course that may not be the case because we have news coming up, and news can change everything very quickly, especially rate decisions. So it's a matter of waiting, being patient, and yeah.
With Hamad said check the EU on the 5-minute, because I know what he's looking for. He's looking for that return to the mean type of trade that I normally do, but I don't think this is ready, man. I think it needs a little bit more kind of like consolidation and then something like that. I don't think this is ready. I think the EMAs need to come a little bit closer together. The EMAs need to come a little bit closer together first. We need more consolidation, and then after that, a break above, the retest, and then a continuation onto the 200 as a take profit. It's probably a little bit early, but that would be a nice trade. Plus, you've got all of these areas as well that are sticking points, so you have to get around that, and then you have to get around that just to get to the 200 EMA, which would be in that area as well. Oh.
I was looking at the this is what you're saying is only based on EMAs, right? On the momentum, on it coming back to the mean, which this case is the 200 EMA, right?
Yeah, they're just like dynamic support and resistance. That's all we're using them for.
Nice. And we see your gold is still playing.
My gold is pretty much doing nothing. we have been in the same place now on the 5-minute. If this was a really good momentum trade, we wouldn't be oscillating too much in this area. We'd have already pushed up. So it's a little bit of a hit and miss.
The press conference under the interest rate decision for Canada. I mean, in 30 minutes from now.
You think gold is waiting for that press conference?
It
I mean,
could be.
Canada is pretty big as well, right? Quite effective.
Yeah. Look, it's not really doing anything, is it?
I didn't hear you, Anastasiia. You said Canada is a.
I was saying that Canada actually affects gold, right? A lot usually. So maybe this, but maybe we're gonna stay there until the Fed decision. Also, quite possible, because right before the Fed, I find the market is usually just consolidated and doing nothing, just because everyone is waiting so much for what's about to come.
Yes. Indeed, there is a correlation between Canadian dollar and gold. Yes.
Yeah, that's super. Pound JPY is super technical, super clean. We spoke about Michael and I spoke earlier about JPY. He was actually short up here, so he's got a really nice trade. I'm sure he's really happy with that one. He's looking for a price to come back into this area. Super clean. That's it. Let's have a look.
Yeah, I was looking into, perhaps I can show my my chart. I was looking into any reason that I can find for being long gold here, and of course my approach is different than Alex. Alex is moving is trying to catch a retracement in the trend, right? A counter trend, basically, as it goes back to the mean. That's a mean reversion before it continues to trade, and which is completely different than what I'm looking for. So and both of them can coexist at the same time, no problem. But in my point of view, I I start on my analysis, of course, on a higher time frame, not on the minutes, but on 4 hourly, and I can see, yes, I can see there is an order block here, right? We are currently in, and that makes a lot of sense for price to have some kind of reaction to it, right? It's the first time we're visiting that order block. But one thing is, it's not part of a quasi, so that already diminishes its chances of price reacting to it, and it's not a fresh order block anymore. Because of those two reasons, I don't typically trade that order block. I see it is there. It is a demand zone. We could have a positive push from it, but I need a lot more to look for that, to be long. So I currently, the only thing that I'm looking for, if anything, is a short on EU, but short from the fresh order block it left behind recently, right? And it doesn't look like it wants to come back to that area. I think it's not going to trigger me today, but of course we have the news coming out. Other thing is, by that time I don't trade anymore. It's outside of my trading hours, so I will probably will not have any signals for today on EU. I would be waiting for price coming back to this area. And as you can see, I already have two horizontal lines indicating the area that I'm interested in, where I'm going to be looking for reversal patterns on the lower time frame. But we're not there. Price is, so I don't have a reason to go long here, at least not through the lenses that I see, look at the market. So that is and the same holds true for GU. Not surprisingly, of course, I'm waiting for that H4 order block to be retested, and it looks like we're not gonna get it today. We did hit TP on a trade that I took yesterday, but the trade I took it, I closed it before at the end of my trading session because it wasn't going anywhere, and I didn't have a reason for the daily, on the daily or from the daily, to hold it through. Eventually, it did reach TP, but it doesn't matter because I already closed it at a little profit. So that's it on those two pairs that I constantly look at for my trades. Guys, we are past the time. I think we
I literally just got stopped out as well. So the meta guys is no longer 99% win rate indicator, but no, I did take, as soon as I saw, I'll put up my chart. Once I saw this, that it was struggling to actually push up on this little area here, I did cut half of the position. So when it pushed down to here, I did cut off this position. So I took half of the loss, and then the rest of it did come down to take me out for the rest of it. So yeah, no, the Met is no longer a 99% win rate indicator. It's a sad day for them.
98 now.
Yes, exactly. It's still good.
It's a sad day indeed for in indicator land.
Yes.
I'm excited to see where it's gonna go closer to Fed. We're together with the GU, EU, because it's curious to see what's gonna happen today as the first interest rate decision after Trump.
Definitely.
All right. So we are wrapping up our show for today. I hope you guys have enjoyed a lot our show. We are here from Monday to Wednesday, trying to bring the best we can in order for you to grow, and that is a promise we make, and we try hard at it every time we come. And I hope you enjoyed our effort. If you did, do us a favor, hit the like button, subscribe to our channel, make us know that you like what we do, that you get value out of it, so we can continue doing it. We have a workshop on Discord in about 40 minutes. If you're interested, come by, stop by. We'll have a discussion. It's just traders among traders talking to each other. Sometimes I explain things a lot of the times, but other times we just chat, which is also very important, right? As a trader, we tend to be alone with our screens, so it's a good thing. We meet up from time to time, and exchange ideas, experiences, and help each other in the process. We're in the same boat, so come by. It's an open invitation for everyone who is a member of our Discord, and if you're not yet, you're missing out. Subscribe to or not subscribe, get an account with the 5ers and be able to get that will give you access to the Discord server. Any last messages, notes before we close, guys?
No,
Alex is thinking about his gold.
no. Everything is totally fine. I'm joking.
Guys,
No, everything's good. Thank you for having me.
Thank you guys so much
No
for the
problem.
stream. I think a whole bunch of value as well for everyone who joined and stayed with us for the full 2 hours. I would say that besides clicking the subscribe button and the like button, please make sure that to share with your fellow traders, because this is where you get lots of information, lots of value that can help you to become a better trader and help you to get funded as well. So come to the next streams and we'll see each other there.
Alex, Anastasiia, thank you for your input. We see you all next time.
See you
Bye-bye.
later.
Thank you, guys.